Well, good Monday or Good Friday morning. Good Friday morning. It's end of the week here. Hope everyone's had a great week so far and looking forward to a weekend here. And welcome to the California MBA's Mortgage Innovators Committee, our newly renamed committee, formerly the MTAM committee. We've dropped the acronym and we're just going with Mortgage Innovation Committee. It's our first webinar under that new name, and we're going to be talking about some great innovators, some great new products and trends in the industry here. We've got a great crew of characters this morning, and we'll start the conversation off here in just a minute here, but wanted to thank our sponsors for this committee. All this committee's great work would not be possible without the support of Insellerate. So, and we're lucky enough to have Josh on the webinar today. So instead of me blathering about how great Insellerate is, Josh is going to talk about new launch they just had here at our Mortgage Innovators Conference recently.
Dustin, thanks. We appreciate it. We really like the partnership with the CMBA and the Mortgage Innovators group. Obviously, we feel this has become probably the leading information or leading outlet right now for what innovation looks like in the mortgage industry. So really excited about that. And yeah, we launched a new product. We expanded upon our Data IE product, and we launched our Customer for Life product, which allows, really what we wanted to focus in on is over the next year or two, people are going to be doing more and more purchases, keeping customers, maintaining them for a lifetime, understanding who they are, being able to use better, rich data within your CRM. So a Data IE and Customer for Life has taken in great information about your customer, home values, recent sales in the neighborhood, comps, foreclosures, all this great information. And it allows you to electronically send it to all your closed loans, and they get a nice email report or physical mail. So that's a Customer for Life product. We also have physical mail, and we have a whole mail program that can go out with our through our platform. It's all automated, so your consumers can get great messages and great information from you. So definitely check us out if you're in the market for a CRM lead management engagement platform. Definitely see what we're doing. We grew 142% last year, wow. So we are definitely gaining some market share. So you should check us out. Find out why.
Yeah, and I'll added that if you're not, I always say this on our podcast, but if you're not following Josh on LinkedIn, you're missing out there. I know, Josh, you guys just posted a great conversation you had with Rob Chrisman. You posted a conversation this week with Michael Hammond. Really good stuff on there. So thanks, Josh, for the support. And now I'm going to hand it off to our esteemed co-chair of the committee here, Joe Dahleen, to kick off the conversation. Joe, over to you.
All right, thank you very much. Okay. I'm here to be a moderator and keep this thing rolling. So pardon if I pump in and jump over your conversation a little bit to keep this thing rolling, but that's what I'll do. But first of all, I guess without I just got to give a big round of applause to each one of you, what you've done for our committee, what you've done for the California CMBA, and really the rich content that you're bringing. So, and thanks for the shout out to the committee, Josh, and that's great. We are really involved to try to bring some really excellent content. We only do it once a month. We only have really like 9 or 10 a year, plus the shows that we do. So this is very important content. So thank you all for what you've done for the California MBA and the Innovators Conference. This is our Best of Show edition, and we want to, give you back some more time to share your thoughts and insights and your expertise with every one of us today on this conference. So I'm going to start off with a series of questions. I'll ask you this question. This question's not just for you. This question's really for everybody. Feel free to chime in, and I'll try to keep us going. So I think the very first one is really going to go to, I guess, Josh. So what do you think is the next big thing or breakthrough that's going on in mortgage technology today?
That's a great question. I think there's two paths that are going right now in the mortgage industry. I think one is more obvious to folks, and that's the move to having a unified platform to manage your customers, right? To have a single source of record, to be able to have a CRM that can manage wholesale, consumer direct, retail, all your different channels, and then in that have it all integrated, right? I think integration is a big thing in the mortgage industry right now. We have so many disparate systems out there that just aren't integrated. So I think what I see, lenders are going really heavy after platforms that can be easily integrated, kind of bring the whole tech eco-stack in there. And the second line, we don't hear as much about, but it's going to be, I think, probably the biggest impact shifter in the mortgage industry over the next handful of years. I think is back office efficiencies, underwriting, AI underwriting, and so forth. I mean, I've been in this business for 22 years. In 2005, it cost me $700 to underwrite, fund, ship, QC, close a loan. Now it's like, you know, $3,700 to do the same thing. It's more expensive now than ever. So I really see that margins compress, that lenders have to get more efficient. So I think that that's going to be a big emergence, is how do you become more efficient in the back office? Because it also improves customer experience, everything, right? So that's, you know, it's hand in hand with people who are trying to manage the customer experience.
Ike, how about you? What's the big thing or the big breakthrough you see in mortgage technology today?
I echo what Josh said. We are in that business ourselves, in the sense that what our firm does is come in and facilitate that workflow, which is including a number of disparate parties, laborious tasks, and by virtue puts us in that back office and mid workflows. And we've seen a lot of growth. Last year we grew close to about 1,000%.
Wow.
And we're currently teed up for similar growth right in front of us. So very much the case, we feel the same. This is where the pain points lie the most. The competitive nature of the business has already happened, where origination and the front end income verification and so on is happening. So the mid workflows and the back office is where we are. We see a lot of growth. It's very promising. And of course, it'll stitch up to everything that the industry is trying to do, which is the e-closings part. You can't really do e-closings unless all those workflows of different phases of the journey are stitched up together. So the stitching is happening right now. So, and hopefully in the future, everybody talking about AI, there's still that balance of human nature involved above and beyond AI, and that's not going to go away. So putting your arms around machine learning, AI, and then delivering something seamless, safe and secure would lead into everything that innovation is driving us towards. And blockchain hopefully will play a role of a secure repository rather than garbage in, garbage out being recorded.
Sure, no, that's great. That's great. Parvesh, I mean, he kind of teed you up there a little bit, but how about you? What is the breakthrough that you see, or the next big thing you kind of see in our mortgage technology space?
Yeah, you know, I think, you know, both of what the other constituents kind of touched on are similar things that we're seeing. Obviously, we've seen record highs in terms of loan volume last year. A lot of that was on the refi side. So essentially what, you know, Josh was mentioning is now the conversion into a purchase market. And, you know, people had to throw bodies essentially at the problem. And so they did that, they scaled up. We know that this is a cycle that now, when volumes come back from the 14 million loans that we did in 2020 and it comes back down to some normalized rate over the next coming years, people are going to have to figure out how they scale that underwriting process that Ike and Josh were talking about in a very automated and AI friendly way. I think if you extrapolate out from there though, and you think about the, you know, getting that information into a data format, a lot of things that we think about with our AIQ products, what can you do next in terms of automating that underwriting is important, but also thinking about once it is in that digital format that Ike just mentioned, then what does that mean, you know, in terms of the subsequent parts of the supply chain? And I think the things that you'll start to see is that connection between not just the instant underwrite on the front end, but if you are able to get it into a digital format, then you can automate the underwriting, but you can also start to think about what that means in your secondary market liquidity standpoint, where there is a trusted data source from origination all the way through to that secondary market purchase. So I think, you know, in summary, you're going to start to see this connection between the front end and the back end. And what historically has happened was there was really just a digitization of the application, but the way that you're able to think about the scalability is carrying that digitization all the way through to best execution pricing and things on the back end.
That's really good. I mean, I think you're right. I see it too myself. I see the digitization coming through to do what Josh said, to just lower the cost, do what Ike said about consolidating all the data fields and everything else. So it makes it easier for you to move it downstream and to get it fulfilled and get it closed and sell it through the window if that's how you're doing it. So great stuff on that side. I'm a big proponent of that. So back to you, Parvesh, for this one. So what do you see as the biggest misconception that lenders have about digital mortgages?
Well, Well,
That he signs a digital mortgage? That's the biggest misconception ever.
Yeah, I think we actually just kind of touched on it a little bit. There's a misconception that the digital mortgage is all about the consumer engagement path, and that it's mobile, for the consumer, and then it's all about the application process. And I think what Josh and Ike both touched on is that it's much more than that when you start to think about digitization of the mortgage. And I think what's interesting is that we live in a very complex manufacturing process in the mortgage space. If you think about all of consumer lending, credit cards, auto loans, and things like that, mortgage has a lot of oversight in terms of a highly regulated industry. And it's the biggest buying decision that most people will ever make, so rightfully so. But you have to really think about what that means in terms of that supply chain, and I would say, mortgage manufacturing process. And so to the extent that you are able to kind of think about, yes, I want to engage the consumer, digitally on the front end, but then I have to carry through all these subsequent processes to make sure it doesn't come off the rails. That's really what a true digital mortgage is.
Yep.
And then when you think about what we just talked about, where, the lenders care just as much about digitization as the consumer, because that's what's going to reduce their costs. That's what's going to get it into what Ike alluded to, a blockchain-esque trusted data format, to then be able to automate, the entire process. So it's not just an application and a mobile-friendly, consumer engagement suite. It's all the subsequent steps that need to connect together in a data-centric world that really is a true digital mortgage.
What do you think? What do you think, Ike? What's the biggest misconception that you see about digital mortgages out there? You're heavily involved in that side of it.
Yeah, I think a lot of that Parvesh just very well articulated. I'll take bits and pieces of that and try and add to it, because I'm going to sound like echoing him. It's pretty much the misconception is, everybody, when I got into the mortgage business recently, 5 years ago or so, I found the industry so well absorbed within themselves. I saw lenders talking to themselves. The events are for lenders and some vendors. And then slowly over the last 2 years, people started to recognize that, hang on a second, we all exist because of customers. What about customer experience? And then the industry started talking about customer experience, and it became all about what Parvesh just perfectly articulated, where the mobile and digital app doesn't mean that the customer is looking at an app that's friendly, that's great. No, but the cogs behind it are so many. And the industry, I think, in one word that I articulated ahead of what Parvesh just said, my word was not connect, my word was stitching. And that word was basically all these different cogs are now stitching in this e-closing platform. And I think that's going to take a little bit of time. It's not going to be that quick, because as everybody's competing for what's the best standard or what's the best way or which strategic partners will gain space in marketplace, that will further define as to what's left to be executed.
I think you're right. And also, congratulations, Senator Warner, for bringing up to the national Ron thing. So let's get this thing done, and so we can move on with our industry. We move slow enough. We don't need Congress involved, hopefully, for too much longer. So Alex, welcome, my friend, and thank you for being one of the best of shows and everything you do for us here at the CMBA. Question to you: what do you see as the biggest misconception that lenders have about digital mortgages? And I would say this, Alex, from your perspective and Josh's perspective, the better consumer experience you have, the higher customer stat, right? So is there a misconception about leveraging technology into customer stat?
I was on mute. No wonder you couldn't hear me. That could have been the challenge. That's my first time to do that. This is good. All right, we're going to chalk this up. So the biggest misconception, again, I've been listening in the background, trying to set up my camera and make sure that I could appear on screen properly. Everything I heard makes sense. When I think about what lenders think a digital, actually not even lenders, what consumers think a digital mortgage is or should be, I think they think it has to be some sort of it all has to be on your phone, or it all has to be like in one particular sort of frame. Thanks, Dustin. Dustin was telling me I was muted. I'm all good now. So the misconception is, first of all, it's it has to look a certain way or it doesn't work. And that to me, first of all, that to me is a misconception around a lot of things in general. But when it comes to digital mortgage specifically, they're all trying to copy the one that's doing it best. And that's not a great use case for anything. Use any sort of strategy as your own strategy, right? How does it make sense for you and your business? So what does digital mortgage mean for you? Not what does it do for everyone else? Is it good to look at what's working? Fine, look at what's working. But a misconception is that it has to look a certain way, has to fit in a certain box, and it has to be this type of experience. And that to me is just not true. Make it your as a matter of fact, for everything you do, make it your own, make it fit your brand, your style, your purpose. It's important. It's very important. So as a quick add-on, I know you guys have to move on, so thanks for calling on me for this, but I wanted to answer quick.
No problem. And I'll keep you quick on this show this time. Josh, you want to dump on that, or you want to?
Yeah, no, I mean, you're right, Alex. Lenders have to figure out for itself, but I think it's important. Lenders really need to figure out how they want to do business. And then, what Parvesh and Ike said, which is true. Digital mortgage was this POS thing, right? Point of sale solution is what people call a digital mortgage. Well, I have to tell you something. We had POSs in 1999. I worked at IndyMac Bank. You could go online and apply for a mortgage, pull your credit, get everything. That was 20 something years ago. We had that digital mortgage, that same sense. So that's never changed. The misconception is what to really do digital mortgages. It's things like day one certainty. It's things like pulling in day one certainty on assets, income. One day it'll be title. Maybe title's on the blockchain, and then we're going to be able to verify title in real time, payoffs in real time. So really, the consumer is seeing digital, meaning they can interact with you digitally, which every lender has to be doing that at this point. But the secondary part is, how do you take that digitization of your mortgage, the data you have, and turn it into a better experience and a faster close? I think that's the big thing. It doesn't stop with the customer. It's the back office actually is what probably drives more of the customer satisfaction than anything else.
Yeah, you brought up the day one certainty piece. I think I was one of the very first ones in the country to fund on day one certainty, and I've been a heavily involved person inside that area and the technology side and everything else. And I think some of the biggest misconceptions that people have about digital mortgages is that the consumer really wants to drive the process. They want to be in charge. And now with day one certainty, it's all permission authorized. They've got to log in, authenticate. You see now in the e-closing processes, you got to go through the Joomla authentication for KBA first and do the verification of identity before you can e-sign. So all of these things are what digital's about today. And the misconception is that they don't know how to really do those today. And that's unfortunate, because they're just going to get run over by the competition. Okay, back to you, Josh. I'm keeping it moving fast. Everybody talks about how to capture the millennial. You've done a lot of that yourself and presented that many times. But is there any talk out there about capturing Gen Z? And are forward-thinking companies thinking about trying to capture Gen Z?
That's actually a really good question. It's something that we were actually posing internally.
I wrote that question down.
Yeah, we were talking about that more recently. As we looked at the millennials are, I forget what the number is. Some high amount of millennials are turning 30 every day now. So when we talked about these millennials, that's just the people now. It's the average customer that's out there. That's our average customer. So you're right. We do need to start thinking about Gen Z, right? What does that look like? What's the next wave? I mean, it's really just, it's a furthering of what the millennials are. I mean, talk about someone who really is going to expect always on, always accessible, real-time data, right? Real-time feedback, understand your reviews from other customers. I can, look at my daughter, she's 12. The stuff that they do is very different. They know a lot of information about who they're going to do business with. So I think having the ability to provide that information and make it easy, it's just going to continue. That's going to be where the race is going to be, make this easier and easier.
That's really good. Ike, what do you think about that? Jump in on this. What do you think about this? Are forward-thinking companies thinking about capturing Gen Z?
100%, because that is your new spending dollars coming in on top of the refinances. and that's a generation that's very much used to the Uberize and Amazon world, click, instant gratification. And in order to facilitate that, it's very important that the companies get closer and closer to what's been missing in the mortgage industry. And by that, what I mean is, when you look at securities transactions and stock exchanges, the asset classes have been securitized, vetted, that they're real-time trading. You can't do that in real estate because there is no such exchange. And so how do you get closest to it is to have fluid real-time data in order for the new generation to be able to capitalize and leverage on what they've been born with. They've been born with Apple phones and they want click, done. So how do you do that? You can only get closer to it, and that's going to happen with fluid real-time data all stitched up together and permission-based technology, strategic flows of front, middle, and back. And that's happening. So you got to stay focused.
My girls, they're 20, they're in college, and they just, they look at everything on their phone. I mean, everything's done this way. They're trading on, I got them set up on Robinhood. Because they wouldn't set up an E-Trade account, but they went on Robinhood, there's spending away. So, Parvesh, you want to jump in on this question? What do you think, that forward-thinking companies should do, and what are you telling your clients to do to focus on Gen Z? And is that important?
Yeah, I think it's a really interesting space that we're actually starting to emerge into, because the millennial generation was the next biggest generation in terms of consumerism behind the baby boomers. So everyone was paying attention to when are they going to start buying, when do they want to start moving in, and we know that they looked at the world a little bit delayed because they're getting married later, they're having kids later, all that type of stuff. Me included. Didn't have my first kid until I was 39. So, but what's interesting, if you really start to kind of put them in buckets, is, to me, the millennials are the ones where we said, okay, we have to go mobile. So I think Josh was mentioning that we had a POS, that started in the 80s and 90s, and I think that's 100% right. We had websites people could log into. The conversion was really to taking that web application and putting it on something mobile to really engage the millennial generation and meet them where they needed to be, which is they're not going to be on a laptop, they're going to be on a mobile application. With the Gen Z, what I think is really interesting is that the data that we've amassed now, it kind of goes beyond just being mobile, and it really starts to look like we have the understanding of who they are. We can proactively engage them without them having to come onto the mobile app. We can take the data that's been amassed through all the different entities that are amassing the data, us, ICE Mortgage Technology, servicing platforms, companies like Experian, Mint.com, things like that. And if you combine that with where they live, which is a lot of this social media kind of area, then you can take that data, you can combine that essentially with where they're living and start to proactively engage them at what we like to call the point of thought, where we can start to tell them that they're qualified rather than waiting for them to engage us on the mobile side. So I think that's kind of the delineation in my mind between millennial generation that wants to be mobile first, and the Gen Z, which wants to be mobile first, and you can start feeding them, directionally where you want them to go. So I think that's where you got to kind of start thinking.
Okay, back to you, Parvesh. Next question. As we walk through our tech stack, what technology can we add to our tech stack that serves a multi-purpose within your organization? Maybe it's consumer facing, maybe it's sales together that helps them in some way. What multi-factor things are we talking about that you really want to add to your stack today to reduce touches?
Yeah, I think, so I'm probably the least technical person in this room, so I'll kind of talk to what you spoke to, which is really the engagement model, whether it's a back office, person, or salesperson, loan officer, whatever. But I think, you kind of touch on it a little bit, and then I'll kind of move away from this. But like the consumer engagement, it's a way to engage the consumer, but now we're moving into a world where it's an instant underwrite. I think Josh touched on day one certainty. I think what's interesting, and there's going to be new breakthroughs to this with the reemergence of mortgage-backed securities and things like that, is that, outside of day one certainty, there'll be more of this potential for instant funding combined with the instant underwriting. But when you start to think about kind of the back end, and I think we touched on, I forget who mentioned it earlier, but on the e-closing side, you
Yes.
start to think about the different kind of use cases, or I guess I should say benefits as opposed to use cases that provides to
Right.
all the different constituent bases in the ecosystem. And so on the
Yeah.
lender side, you think about all the things that you need to be able to do to be able to automate that closing of that loan. And if you can get it into a e-close, that's going to benefit the lender in a much more accelerated fashion, because you're going to have it in a data format that you can then, more quickly transfer that to whatever pathway you have to go down. Warehouse lenders, due diligence companies, quality control companies, aggregators, mortgage-backed securities, GSEs, whatever that looks like in terms of where you're going to transfer that loan that you manufactured on the front end. Then at the same time, what this also helps is the settlement agents. And
Yes.
so,
The notaries.
I think what we're really excited at ICE Mortgage Technology is the fact that with Simplifile and Encompass coming together, we have 84% of all e-recordings that happen in the US, and we have 50% of all US originations that happen in the US. That represents 47,000 agents, that represents 3,000 lenders that can connect instantly. They don't have to go on to new software. They don't have to buy and go in and out of technology to be able to actually interact and create that e-close.
Sure.
They're already sitting in those technology platforms. They're just adding on features and enablement components to actually do that. And so what that helps with on the settlement agent side is, again, they don't have to have a change management process. They don't have to have new technology that they interact with. They can seamlessly just start to do e-closes with their customers, which are the lenders, which make their lives easier, which go back to the holistic digital mortgage.
Hey, Josh, what about the aspect of e-closing and the effect on the supply chain and the pull through? I believe that this type of an experience for a borrower helps customer stat. If you have a great closing, that's the time to ask them for the review, right?
Yeah, no, I mean, I think to the question of how does this affect the customer, greatly. And we did a study a couple of years ago, and we wanted to see what close times meant with pull through.
Sure.
And we looked at 16,000 closed loans, and we looked at pull through time days. We did a pretty good study, and what we found, which was really interesting, is for lenders, if you change from 30-day close to a 29-day close, let's say your pull through was 60%, you went from 30 to 29, your pull through went to 61. You went from 30 to 28, your pull through went to 62%. So as we saw each day tick off, they got that same amount of time in their pull through, which is huge, right? I mean, you get 5% more pull through, 10% more.
Not to close it.
That's right, and the customers are happy, and it made sense, right? Time kills all deals. That's what we always say to people. If a deal sits there long enough, something happens. They get another offer, rates get lower, they decide not to move, they get a divorce. I mean, I was a loan officer, and there was 1,000 things that could come up right at the very end, kill a deal. So that speed is huge right now, and that's also not just
you're getting all the money for the down payment from your girlfriend.
That's right. It's not. That's right. And it's not just. And what's great about it is if you do it good really now, and that stats score we're talking about, that means that next year or the next year or the next 7 transactions that customer is going to get, hopefully you'll get it. Right. That's really the.
Alex, effect on the consumer or multi-parties in the organization by leveraging any part of the technology piece? It's up to you. What do you think?
Yeah. So yeah. Throw that question back at me, because I heard 2 different ways that was just answered.
We
and I want to make sure.
The tech stack. We want to know what kind of tech stack that you could add to your tech stack, or what piece of technology you think is important to add to the tech stack that can serve as a multi-dimensional purpose within your organization.
So I think something everyone should be looking at, as you just brought up a question about Gen Z, by the way, right? We should all be looking at how to use more and more social in our conversations and in our delivery of keeping our clients up to date, right? So first of all, a quick note on the Gen Z side. The Gen Z, and then I'm going to answer this question too, but this fits right into it. So Gen Z, by the way, is people between ages 6 and 24. So there's 2 different kinds of Gen Z that we should be focusing on. I think the 18 to 24 is where the focus should be. And the 18 to 24 Gen Z personalities are looking at millennials. and they like the individuality of millennials. But you know what they started to do now? Gen Z is really focused on finances. They really are. Where
Yeah.
millennials were all about my way, my life, I want to do it this way. Gen Z, like my way, my life, but I want to make money. Like
Yes.
I want to make money, all right? So I need financial security. I need to do that. So if that's the case, and we know that they love ultra personalized experiences, well, my social presence, my ability to communicate with my audience in my environment is where my comfort level is where I make a lot of decisions. Millennials are there already too. That's why a lot of this digital mortgages is coming up. So I would say anything that has to do with the ability to improve the communication channels with your customers and future customers has to be at the top of the list. How do I engage with my customer in a place that's most convenient to them? Getting
Okay.
away from paper, getting away from the big computer screens, right? And making things more personal. By the way, if you are using computer screens and you are using communication, Gen Z and millennials, by the way, love to do what we're doing right now. They don't like this. They like this, okay? They want to see who, they love that. So think of implementing technologies and communication channels that creates a face-to-face, a digital belly-to-belly instead of a physical belly-to-belly where possible. And that is going, you're going to see that be a big part of really where a lot of things are going in general. So I
Okay.
think if you're going to add a tech stack that adds something technology to your tech stack that helps all parts of your organization, it's those communication channels. Because look, underwriting, processing, closing, sales, compliance, all of that, it's finding those unique channels of communication that works with this newer, younger, broader audience is going to help all channels. It just will just simplify the process.
Got it. Hey, Ike, let me ask you this question a different way. And this is really kind of going up towards, what you did at the Innovators Conference. If I can add something to, or if I can add a process or a piece of technology into my tech stack that a lot of my divisions in my company can benefit from, like Parvesh and I were talking about, e-closing. Well, that helps the notary, it helps the agent, the escrow officer, it helps the real estate agent staying involved because they can know all the stuff that's happening. It helps the loan officer because he's relieved of the burden. Now the docs are out, and the consumers reviewed them. Now they're just going to ceremonially sign. Looking at all of those things in your particular knowledge, what would you do, or what would you advise our lenders to focus on?
I think it depends on the resources they have. Luckily, today we've got a ton of resources and multiple options because everybody's innovating and embracing technology. So that's a good thing. But very few are well placed. I think while everybody was talking, it gave me a few minutes to come up with a few words. It gave me some advantage. So, and thanking all my colleagues here on this thing, I think the words that came to mind was you're looking for omni delivery, omni purpose of deliverables and services. In order to do that in multiple channels, you need to be omnipresent. So to be omnipresent, very few firms are able to do that. I mean, ICE is well placed to do that because of its number of acquisitions and resources and presence and the traffic and the leverage. And then there's Black Knight, of course, that has similar, but not everybody's ICE or Black Knight. The others have to find a collaborative, strategic partnership or leverage what ICE has done and Black Knight has done to bring those onto a platform where e-closing makes you omnipresent at any workflow at any time. That includes social. That includes looking at the new clientele, where they are today in life and where their income's headed and how do you quickly get to it, and making it decentralized, DeFi, and making it open banking. All of that is on these platforms and it makes sense.
All right, that's great. Okay, back at you, Ike. Another quick question for you directly. What technology or strategy should lenders be looking at now to capitalize on the purchase money market that we see? I think the MBA said 74% of purchase loans will be the total number of volume. 74% of volume of mortgages in 2022 will be purchase money. What piece of technology or what piece should you be thinking about on that strategy side to think about the next few years coming up?
Yeah, for lenders, I think the competition remains the same, right? To get quickly to the customers, to provide better customer service, be omnipresent for everything we just discussed. And for customers, which you didn't ask me about, it's slightly different, which I think the markets have changed where lenders are more cognizant, aware of delivering customer service, where decentralization, DeFi, and open banking really something to embrace and deliver to that market coming in and purchasing, because the purchase market is going to be, remember, new dollars, right?
Yes.
Because a lot of the older generations, older buyers or homeowners have gone through refi. And so the new ones coming in can benefit from everything that has been digitized in the last 15, 18 months to a degree. What technology should they have? They should be really up to speed on omnipresence with partners and marketing strategies that allow them to play with strategics, the new fintechs, the new mortgage techs that get the job done quicker, faster, cost efficient, transparent, and deliver.
Josh, what technology are you giving your clients today that helps them prepare for this epidemic of purchase money coming our way?
Great question. It's something we've been really focusing on over the last year because we know where the market's going. I think one of the opportunities that we see, and actually it works with something we've had on the platform for a very long time, is lead management, contact management, and omni-channel presence, as Ike, you said. And that's speed to connection, right? If you actually talk to online lead providers, people who create leads, bank rates, the lending trees, or free red updates, those folks, when I was a lender, and still today, they'll sell their purchase leads for next to nothing.
I know.
The reason is because no one really buys those. They don't want to work them. They don't have a process to do it. They don't have a system to do it. But I can tell you, why did Zillow buy a purchase? Why did they buy a call center? Because they realize that's where the money is going. It is call center stuff. So you have consumers like crazy going online. They're looking at a house and they say, oh, yeah, I want to get a loan. They hit a button and they're expecting a call. They're expecting a follow-up. They're expecting an experience. And let me tell you something, they're not getting it. They're not getting any of those things because the lender doesn't have the technology set up to do it. And then also the loan officer says, oh, you're looking for a house, call me when you find a house, right? So there's that whole rub right there. So I think if you're a lender and you go, I'm going to make use of all these people who are online right now. I mean, taking virtual tours, walking around, for this last year, let's make use of that. Let's buy these leads. Let's manage that. So, obviously a system like ours does that. I think it's something that you need. You need lead management, contact strategy management, omni-channel marketing. And so I think that's a big thing is you're going to see some lenders we have lenders on our platform that are doing really well already with this, and it's only going to grow over the next 2 years.
Yeah, I agree with you. Alex, you're in this business too as well. What do you think? What strategy or technology can lenders leverage to capitalize over the next 3 years?
2 words. Sales boomerang. 2 words. Why are we even talking? No, I'm just kidding.
Why is the logo not popping
Okay,
up?
guys.
The logo should pop up.
I came in just for this question, everybody, by the way. That's all. Thank you so much. No, in all honesty, everything you guys are saying is spot on. But it's not just technology. I think it's right now, look, everything starts online. But when it comes to purchase, you're still having the majority of every customer talk to a realtor before they talk to a lender. Right?
Mm-hmm.
It's still that way in most cases. It just is. Yeah. And that's because it's a purchase. So they think of a realtor before they think of a lender. Would we like to see that changed? I think we all would like to see that changed. I think we'd like to get people approved and then let them go start looking for homes, right? Instead of them starting to look for homes and then not be approved for those homes, right?
Because you're not going to be able to make an offer today unless you give them that pre-approval letter. So
That's it. Hey, there you go. So for us, and this is where Sales Boomerang does help. For us, I believe it is truly creating a dedicated, right? So like you want your realtors, you want your agents to be loyal and dedicated to a certain lending institution. I believe the best experience and the best way to capture purchase right now for all lenders is to get all of their agents to work with them exclusively. How can you make yourself the exclusive lender for your realtors? Because I promise you, your realtors right now have more business than they know what to do with, and they can't fulfill the business because half of these people go, I want this house, and 24 hours later, it's gone. So now you have what? You have pent-up demand. 10, 20, 30, 40, 50, 100 people that want homes that haven't been able to get them because those things are off the market. Why did I say Sales Boomerang, the 2 words? That's because when they are ready, when something is available and they're back, we are notifying them that they are ready. So get your agents in the door with you, wrap all of this data around with this intelligence, and you all can't miss the opportunity when it happens, because there are people that are literally waiting for the next home to come in the market, the next one, and they're there, and they will pay they'll pay $100,000 more for that house than what it's listed for. I'll give you this is a true story. Right down the street from my house, there was a new development that was going up. And when it started, it said mid 400s. Now, swear to God, low 600s. That's
Yeah.
like they just keep changing the number. Like, okay, so guess what? There are people that wanted those homes for 400s. They can't get even if they want. So now they have to wait. They have to wait. But how do you know when they're ready? 2 words. You guys know them, right? And so and I hate to just put the spotlight on myself like that. But if I had to recommend something, that would be it.
All right. Okay, now I'm going to switch the program a little bit. I want to get some of your personal insight here, I think. And so my next question, I'll start with Josh. What is the biggest highlight of 2020, Josh? I mean, despite all the disruption, is there anything, a personal or a professional lives that you maybe want to talk about that's your biggest highlight for 2020?
I mean, it's for us as I guess for Insellerate, 2020 was our biggest growth year. We grew 142%. We grew about 80% the year before, 98% the year before that. So in the last, I think, 3 years, we've grown close to 500%. So I think we're excited about that. We're now handling over 300,000 borrower applications a month.
Wow.
Beginning a year ago, it was 100,000. Now it's 300,000. So we've seen huge growth in our platform. So, I mean, from a personal and professional level, it's been great. Our company our ops teams, development teams have doubled and tripled over the last 6 to 9 months. So we're seeing a lot of growth. So it's something that, and it really fits along the lines with this whole conversation.
Right.
New technology, better integrations, seamless integrations, better user experience for the loan officer, for the back office. And so that, we're really excited about that and, being able to really win a lot of large lenders. And it's been a great year. It was a great year.
Parvesh, obviously you went through a lot of challenges in 2020 with a couple of different transactions there, but despite all the disruption, my friend, personal or professional, what was your biggest highlight for 2020?
Well, so to your point, the acquisition of Ellie Mae by ICE both afforded me personal and professional benefits. I was obviously very excited about that. And I think what it really does, and I think what we continue to be excited about, is that as good as Ellie Mae was unto itself, 50% of US originations getting originated on the platform, 3,000 lending origination institutions, millions and millions of transactions happening on the platform. As we've come together as ICE Mortgage Technology, as Ellie Mae, Encompass, MERS, Simplifile, and all the things that we were talking about previously in terms of having the technology plus the ecosystem for lenders to tap into to instantly deploy technology, and really start to change the game in terms of moving from really an analog environment to really a digital data exchange environment that allows us to move data and I would say trusted data across the mortgage manufacturing process is just incredibly exciting for us, because people have talked about e-closing for 15 years. People have started to talk about blockchain, recently. And I think when you start to think about what we're able to do with that data exchange between originators, settlement agents, secondary market participants through the MERS registry, as well as all the new secondary market participants that are starting to come in outside of just a vanilla GSE type world, really starts to afford us the ability to move that digital mortgage forward, but also accelerate the exchange that's going to start to happen across our platform. So I think we're pretty excited about that.
Awesome.
And I'm personally excited about being part of that.
Yeah, and congratulations on all those as well. And I'm a big fan of Nancy Alley, by the way. So and I'm also a huge fan of Simplifile, only because I also do work with them and I use them myself personally. But okay, to you, Ike, what do you think? What's the highlight of the year for 2020 for you? But despite all the disruption.
Yeah, so 800+% growth for us.
Wow.
A huge milestone that we passed, empowering $1 trillion to our systems. That's huge for a fintech that's new in the market. Huge validation, great track record. And one of the things personally and professionally was resilience. The industry has shown that it's very resilient. The industry works really well together. It's got great advocacy groups between MBA and CMBA and others in the country. And that's really helped us and firms like us set our foot in the right direction and get guidance and be part of the forum. And personally, I think just finding love. We find more good people than bad people in the world. The awareness caused and shedding light on hateness helps everybody come together. It's not about just news is just negative. News is just for awareness. It's up to us to filter it and find love in it. And it showed a lot of unified America is coming stronger. So that's personal and professional.
Yeah, that's great. That's great. I would agree with you. The industry needs a congratulations. I mean, we did record volume ever that we ever done in the mortgage business, and we did it basically 9 months from home. So, Alex, personally, professionally for you, 2020, I know it's been a big year, but can you single a couple things out?
Yeah, first of all, congratulations to everyone on the panel of the growth for the year and all the big accomplishments across the board. That's fantastic. It's just beautiful to hear those types of things. And Ike, I agree with you that it is our responsibility to filter and find the good news and the love in what we do, which is why you can't see my shirt, but it says love on it.
Yeah,
and so
Keep the shirt on.
There you go. So, you know, one of the big things that stands out is I've absolutely talk about love, fallen in love with this remote work concept. It's just a beautiful thing that has happened for so many years, decades, who knows how long people talked about this work-life balance. And I think that the remote work has sort of proven that there is a balance when you can do it from home or when you have a hybrid option of coming in and not coming into an office. I have seen so many people talk about how much they've seen their kids in the last year that they haven't seen them in 10 years combined. Relationships that are built, the communication with neighbors and friends and family members, and how about people you haven't seen in ages because of Zoom and all of this video conferencing. You're now connecting with friends and family that you would only see once in a while because you go there, but you don't pick up the phone and call them. But now when you're stuck at home and you're thinking and you're looking at everyone that you haven't got to talk to, you're now doing this with them. And like, we started a poker game with our friends from around the country that would only play when they all lived in Maryland, but they all moved to different places. And we're like, what a better time to connect with everyone than during this time. So I'd say one of the biggest highlights is what remote life has sort of proven to the health, mental health, the physical health. I'm personally physically in better shape today than I've ever been, not eating out as much, working out at home with my wife who's works out 6 days a week. It's all of those things. Having my kids see that I work out with my wife and we're doing this thing together gets them. So that to me has been, on a personal level, the biggest highlight has been just what it means to connect with people personally. And again, to Ike's point, just filtering through the stuff that's out there and holding on to what's important to you. Professionally, we've just had a stellar years, and it's just continuing. So it's beautiful. And now that we've been able to find, we're up to 60 people on the team, and we used to have everyone in Maryland, and now we're only 27 in Maryland, and the rest are all over the world.
Okay, we're gonna start with some questions here real quick. But I'm gonna while we get some of these questions teed up for you real quick, I'm gonna go round robin pretty quick. Last question, then we'll take some questions if there are some. Get that ready there, Dustin. But okay. Because you're a Mortgage Innovators and you came to our conference and you led our conference and you've been doing so many things all year, what's one piece of advice when you reflect back on this last year that you would give to the folks attending today? One piece of advice. One piece of advice.
Where do you want to start?
Anyway, Alex, go for it.
So again, it's just elevate the industry, not just yourself, right? Just give back to the industry, make the experience great. Here's the importance. When you make the experience great for your consumers, then they're not afraid to do business with somebody else in this industry. This industry, unfortunately, has a pretty bad reputation, or has had a bad reputation. We're improving it now. So take care of your customers, because taking care of your customers is taking care of your business. Taking care of your business is taking care of your industry. And we all work here together. So let's make it nice for everyone. That would be my advice.
All right, Josh, what do you say?
I like what you said, Alex, there, taking care of your customers. I think the piece of advice, and I've said this multiple times, and it fits with everything we're talking about, is every lender should sit there and should whiteboard out the workflow and process of what their consumers are actually going through.
Great advice.
Yep.
And then identify all those little bits and points and see where there's bottlenecks, dead ends, when there's triple checks, when you have to, gee, I didn't realize I could have I could ask the customer for this earlier in the process, get some better route data, and clean up the process. So understand what it's actually like to buy from you, shop yourself. And that's going to give you a big picture on what you can improve upon.
Yeah.
Great advice.
Parvesh, what do you say? What's some advice from you learned from this year that you can give to our group here at the MBA?
I actually do two quick things. One, I think we've all seen that, the virtual world and the Zoom world has worked really well for folks that engaged it. And I know as businesses are thinking about coming back, and we have this conversation a lot with our customers right now, it's the age old, don't throw the baby out with the bathwater, and it's not an either or type situation. A lot of folks are contemplating, do we come back to the office? Do we not? Is it more of the Zoom? There's applicability and leverage really in what we can do from a virtual world and apply those methods where they should be applied. And then, in terms of in the office, there's a ton of benefits to being in the office and collaborating real time in person and things like that. So I think that's one. And then I think two, which is kind of goes part and parcel with that digital work that we've done as employees. It's and a little bit along the lines of what Josh is saying, is that now the world is different. And, there's been a lot of acceleration in terms of how lenders can embrace digital technology, whether that's in consumer engagement, things like e-closing, all these different things. So I think it's really important for lenders, whether you're a small community bank, an independent mortgage bank, credit union, large money center, everyone's starting to kind of rethink what they can do to embrace that technology and rechange the game. And I think, if you're going to be a smart, intelligent lender that's going to survive over the next 3-4 years, you really have to step back and kind of re-architect how you're thinking about the world so that you can, really flourish in the next 3 or 4 years in that environment.
Awesome. Ike, looking back on last year and you're reflecting upon the lessons that you learned, what is something that you would like to share with our group? Some piece of advice?
Sure.
Maybe another euphemism if you'd like.
No, I think, innovation is driving a lot of things, and the industry's obviously embracing it, and we've seen the acceleration. One thing, it's got its pros and cons. So if you're asking for what to look out for, is where we're placed as a firm, mitigating risk and fraud. So as digitization and technology has provided a ton of innovation, it's also taken the transactions to online. And when people move to online e-commerce world, the scammers live in that world.
Yeah.
So there's these new areas of exposure, theft, risk, fraud that has gone up with equal double-digit spikes and increase. And it's not just the lenders that are getting robbed or getting misrepresented by stakeholders or scammers in the markets stealing money. It's also the consumers that are getting hijacked from their down payments and misrepresented. So technologies to mitigate those risks is something that lenders should stay focused on, not to just stay focused on origination and not to just stay focused on competing or marketing or retention. It's also closing and preventing the customer experience from horrible experiences. So stay focused on the cons of this innovation as well. You need those tools.
That's excellent. Well, we have one question here, and actually it's for you, Ike. What's the biggest risk to lenders with regards to title and closing and or wire fraud?
The biggest risk is this. I think you teed me up one after the other on these two questions, because as I just said, as they're embracing all these new technologies, and the same programmers and developers and technologies are also available to bad players and perpetrators, internal or external, within the country, within your firm, or outside of the country. And so to mitigate that exposure, they got to really keep up with how do they ensure that data source, data transmission, data accuracy, data retention, avoiding data decay, data collaboration with partners so that it's real-time and fluid to make actionable intelligence and decision easier. That's what they got to stay focused on. And it's no good if you're going to run the marathon for 9/10 of a mile, and at the last leg, your shoelaces were not tied, right? So,
right. or they were purposely snipped at the bottom before you started running.
Right. I think the analogy I was headed there was like you get the ball underneath the hoop and your shoelaces are tight, right? That's the basketball side of the game.
All right. Well, good. Well, thank you very much. Again, everyone, my name is Joe Dahleen. Here's all of our contact information should you want to reach out to us. Thank you very much for joining our session today. Today's session was about our Mortgage Innovators Conference, Best of Show. And we really want to thank every single one of you for attending today. And this will be recorded, and so we'll share it again. Just want to make sure that you come back to our brand new website, the Mortgage Innovators website. You'll see all of these fine people up there on the site, and it's a brand new site we just launched. So please come back and bookmark it and make sure you come back often. And for that, my friends, I'm looking forward to an excellent rest of the year. And I know you all are doing great, but I'm excited to see what you guys come up with here next, the rest of the year. So thank you for your time and make it a great day.
Thank you.
Take care.
Thanks,
Thanks,
Thanks, you
everyone.
guys. Thank you all.
Bye.